So I've been asked to give you my perspective on what's going on in the cryptocurrency markets. To me, cryptocurrency markets does not mean price. It includes that stuff, but I'll talk about that. I'll give you my perspective and Abra's perspective on what we see in the broader Bitcoin world, talk about some altcoins. We think that one of the key emerging trends here is actually using not only Ethereum, but Bitcoin as a basis for smart contracts. And I'll give you some real-world examples of how that's being used by lots of people today. So let's get the easy stuff out of the way first. I don't know if this is working. Maybe not working. Okay, so the easy stuff is the price discussion. This is the total cryptocurrency market cap. If you're in the space, I'm sure you've seen the slide. I think we're at about 200 billion or 200 plus billion. This is an asset class that didn't exist 10 years ago. This is unbelievable. I've been in this space for 30 years, if you can believe that. I was a cryptographer at the CIA, worked in capital markets at Goldman, was on the team that created SSL at Netscape, worked on the first credit card gateway for the internet. I can truly tell you that if you don't think this space is here to stay, you're not paying attention, right? This space has already changed everything, and it's going to get even more interesting, in my opinion, over the next 5 years. This is simply a basic reflection of some people having an inkling that something is going to change. Now, what's even more interesting is that there's all these coins. Now, obviously, the top four represent like 80% of the market cap, but there are several coins now whose value is over $1 billion US, right? Now, that phenomenon didn't even exist 4 years ago, right? So now we're crunching time, right? And even with, this is from last week, so even with the price drop this year, because we got way ahead of ourselves from a market perspective, we're still seeing astronomical numbers. So there is clearly huge promise here from a financial perspective that has yet to be delivered. Now, I am extremely bullish on the idea of lots of cryptocurrencies for a few reasons. I'll give you two, and then we'll move on. But I'm definitely the most bullish on Bitcoin as a store of value and eventually as a payment rail. For the same reasons that I'm also bullish on altcoins existing. The governance for Bitcoin is almost a non-starter. It's a non-starter, right? I mean, it's a completely decentralized network. Getting anybody who has a financial incentive in the system to agree with constituents to make changes, it's almost a foregone conclusion that it's not going to happen again. I was part of the group that tried to scale the block size, and I lost. And as somebody who fought those battles, logically, I can tell you that the decentralized nature of the currency works. That also represents a challenge in terms of creating quickly and testing new technologies that we think could propel the crypto market forward. Fortunately, the easiest way to do that is through competition. And that's where a lot of these alternative currencies come in. Litecoin forked Bitcoin, Digibyte forked Bitcoin. There's some other forks of Ether. There's some new developments like EOS, et cetera, all which basically move the technology bar forward in lots of unique and interesting ways. The last point I'll make on price is I've been a staunch believer that as a new commodity / asset class, we are going to see new institutional money coming into crypto. And I know firsthand that a lot of the kind of buy-side services on the street, Goldman's and others, are looking at how to provide this to their clients. And one of the biggest issues they're dealing with is custody, meaning how can they legally manage their clients' money? They do this for all kinds of asset classes, and crypto is no different. They have to do it in a safe, legal, and secure manner. And I can all but assure you they're not going to outsource it to Coinbase or someone else. It's just not going to happen. So I think there's a massive investment happening on the street right now in New York of firms making a safe and secure custody infrastructure so that they can start offering these institutional services. And so that also gives me hope that we're going to see a lot of new money coming into the space over the next 24 to 36 months. Not a price prediction, but it's pretty clear what, if my first argument is true, what would happen if it does happen. So Just some more kind of generic updates on what we're seeing in this space. Spent a lot of time in Asia. There's a definite misunderstanding as to what's going on. The Chinese government has not banned Bitcoin. They have shut down exchanges, mostly because they were involved in hyping ICOs that were basically trading ERC-20 tokens that weren't registered with the Chinese government. You can decide for yourself whether you like what they did, but they haven't banned an individual from owning Bitcoin. A lot of people are wiring money legally to Hong Kong and buying Bitcoin that way. And they're also doing peer-to-peer trades on the street using things like local Bitcoins. And you can actually look at the local Bitcoin chart for China, and you can more or less predict when they shut down the exchanges, by the way. Korea and Japan have made some really, I think, bold moves from a regulatory perspective, which is why such a high percentage of crypto trading is happening in those markets. I'm very surprised that the SEC hasn't yet approved an ETF, but myself, along with a bunch of others, believe it will happen in the next 12 months. I think, unfortunately, it's probably going to be more of an old school company that's already got other ETFs that gets their the first Bitcoin ETF approved, simply because the gray hairs, white men at the SEC will be more comfortable approving people they know. It's not a space that we're in. We're not an ETF, but at Abra, but I still think it's important. Blockchain jobs is self-explanatory. So one of the key themes for the next 18 months, I think, is the scalability issue. I mentioned the 2x debate, which is long since over. I'm really excited about some of the things that are coming out now, both in Bitcoin as well as Ether. On the Bitcoin side, the network is still facing capacity issues, even in the down market. Mining fees go up and down pretty significantly, depending upon what's happening. There are now thousands of Lightning nodes running. Lightning is a next-generation technology that allows for very high transaction throughput on top of the Bitcoin network, potentially up to Visa numbers, which would be astounding. And similar things are happening in the Ether world. If you were paying attention to the collectibles market, particularly CryptoKitties, when Ether was exploding at the end of last year, you realize that people were paying several dollars to process a single CryptoKitty transaction, which was insane. But luckily, it did two things. One, it showed that the ERC 721 standard for creating a non-fungible token actually works. And a non-fungible token means that my kitty is not the same as your kitty, and we can trade them like a baseball card or a other sports card. But there's a whole bunch of other really interesting applications for these non-fungible tokens, but the network has to scale in order to make that real. And so the two biggest applications for Ether today are these ERC-20 tokens, and secondarily, which are fungible, which is the format used for ICOs, and then of course ERC-721, which is the new format, which is being used for these collectibles or NFTs, non-fungible tokens. Both require Ether to scale dramatically past where it is today. So in this regard, Ether faces the same challenges as Bitcoin, and both worlds are taking very different approaches towards solving the problems, I think in a way that also makes sense for what's unique about both technologies. And it's clear that ERC-20 is emerging as a way to do alternative security issuance. T0 just finished a $130 SEC compliant security offering, 100% based upon Ether using ERC-20 smart contracts. So it clearly works. It's clearly legal, and I think you're going to see a lot more of that. From my perspective, a smart contract is just another way of doing what we've been doing for years. The fact that other people who are accredited investors may choose to do it this way versus the old way of investing in a company doesn't change the economics of investing at all, which is what people forgot last year when they were taking funny money in Ether and putting it in ICOs. Right? The average angel investor invests in about 20 companies a year in order to make a profit. I can guarantee you the average ICO investor was not doing that last year. So, all right, so let's talk a little bit about what's going on from a usability perspective, and then I want to talk about smart contracts. So this is one of the online trading sites for crypto. I'm not picking on anybody in particular. They all more or less look the same. If you're not a trader, you're going to get a headache staring at the screen. And this is what you're faced with for the most part when you're trying to buy and sell cryptocurrencies today. This is an alternative. One is basically theoretically a wallet on the left, and right, a service for switching between currencies. Every time I put these screens in front of somebody and ask them to make sense of it, they fail, unless they're obviously knee-deep in crypto. And so, our question has been for the last 2 years, how is ease of use and or real-world applications going to emerge out of the cryptocurrency market? Obviously, I'm very bullish on this technology and its applications. How is it? What are the steps? How do we get from here to here? And if here is 5 years out, what does it look like in 5 years, right? So at Abra, I'm going to give you a quick demo. We've developed a new type of application that uses smart contract technology in a way that completely hides the complexity of cryptocurrency to the consumer. And it creates, you've heard of this idea of a stable coin, and actually creates a stable asset model so that what you're looking at looks a little bit like PayPal or Venmo, but is actually an investing app and hides all the complexity of what's going on behind the scenes. So let me give you a quick demonstration of that, and I want to talk about what we see coming in the smart contract space as it relates to Bitcoin. So the Abra app today it's a cryptocurrency investing app, but that's simply the first asset class that we've instantiated inside the app. The way we use cryptocurrencies-based smart contracts to create this stable coin is actually not a stable coin. It's actually what we call a stable asset, meaning we can give you investment exposure to anything. Other cryptocurrencies, other fiat currencies, stocks, bonds, commodities, and I'll explain how that works and show you some real-world examples of how that works in a second. Okay, so with the app, you can have a portfolio. Here, I've got a bunch of cryptos, a bunch of fiat currencies. I can use one-click button to exchange between them. I can use a one-click to add money from a bank account, bank wire, credit card. And I've got a very simple, again, PayPal or bank account looking portfolio. No fancy trading mumbo-jumbo. We have senior citizens using this. We interview hundreds of users a quarter. The age range of our users is 18 to 80. When we ask people in their 70s why they're using Abra versus other things, they say it's the only app they understand. And it's literally that simple. We use the analogy of the jitterbug phone. Most of you are probably too young to know what a jitterbug phone is. It was marketed through AARP magazine in the 90s. It was basically a flip phone, and their biggest selling feature was huge buttons, right? And the community loved it, and they still sell hundreds of thousands of them a year. And I saw an ad like 2 months ago, and the ad was, now with even bigger buttons. And they keep selling them. So you press the edit button in the top right. You can add more cryptocurrencies to your portfolio, and they show up in the app. And you can simply press that exchange button. You can add money via the Add Money button. We have an investment from American Express, who we've integrated directly into the app as an initial trial, and it's getting a lot of traction to use your credit card. And again, to exchange, you press the exchange button. I can choose my Ethereum wallets. I can move Ethereum to Bitcoin, or I can move Bitcoin to Australian dollars, or I can move Australian dollars to Monero, and back and forth all day long. And you can see a current mark-to-market of my portfolio with a simple view. These are the cryptocurrencies that the app supports today. Now, how has Abra been able to do this when no other company in the world has been able to go this deep in the crypto world with a single smartphone application? And this is where the secret sauce of what's going on behind the scenes with the smart contracts comes into play. The only native currencies supported in the app today, right? You can hold 50 fiat currencies and 25 cryptocurrencies, but the only native currency supported in the app today is Bitcoin. The entire app is one large Bitcoin wallet. The app uses Bitcoin-based smart contracts to fix the individual values of pieces of Bitcoin in any other asset in real time. Why would you want to do that, as opposed to just holding all of these currencies or holding 50 fiat currencies? Well, number one, it's legal globally because we're not holding the money, right? So you just had the legal panel up here talking about FinCEN rules, state MSB rules, et cetera, et cetera. The whole point of Abra, ABRA, a better remittance app, was how do you turn a phone into its own bank to be able to facilitate banking services legally in 150 countries without being a bank in every one of those countries. The only way we could figure out how to do it was to turn the phone into its own bank. This is where Bitcoin shines. Most people just don't realize that Bitcoin itself is programmable money. They just look at it as digital gold. It's not. Okay? So as programmable money, I can use smart contracts to store dollars, which is what the app does today, or even Monero. Now, if we integrated with the blockchains of every one of these cryptocurrencies, we still wouldn't be live, right? It would have taken my team 3 years to do the work. So that's the other point. It saved us years of development time. All right, let me give you a quick overview of how this works. And then if Brett gives us time, we'll take a couple of questions. So the smart contract basically takes a value of Bitcoin and says, I need to fix that value of Bitcoin so that it's always equal to the amount of dollars you put in the app, or always equal to the amount of Monero you want to put in the app. Right? It's like basically if I handed you a bunch of gold, and the gold was worth $1,000 the moment I handed it to you, how do I make sure that the gold is worth $1,000 6 months from now? The easiest way to do that is to short the gold, right? And your cost of the short, right, minus the value of the short contract plus the gold should always be equal to $1,000 if you short it at that moment. That's more or less what these smart contracts simulate. Now, this is a huge breakthrough because it means I can effectively digitally store anything that's liquid on a smartphone with no central custodian now. Even baseball cards, as long as there's a liquid market for trading baseball cards, which is interesting given that there's now collectible formats for crypto. Okay, so you see this idea of a smart contract oracle. If Abra is acting as the counterparty to these contracts, the two parties have to agree on what the price of the underlying asset is, like Bitcoin, at any given moment. We use a third-party oracle service to do that. This is an overview of how that works. There's a really good video that my team did for the techies in the room that's online that explains this in detail. But basically, it has to address a bunch of scenarios. So you're going to put money on a phone. What happens if somebody puts $100 on a phone, right, and then the price of Bitcoin skyrockets so that the value of what they're holding is now not $100, it's now maybe $5,000. Or if the price of Bitcoin plummets and the value of what they're holding might be $2, but the phone says you're holding $100, right? So the smart contract deals with both scenarios. Effectively, what Abra is doing as the counterpart to that contract is making Alice whole if the price of Bitcoin drops, and Alice is making Abra whole if the price of Bitcoin skyrockets. So I'm going to skip this one. This is the easy part. This is where Abra makes money. Well, how does Abra keep from losing money, like in Q1 when the price of Bitcoin plummeted? So in the first slide, it said that Abra is actually in the market to borrow Bitcoin or buy futures, which we're actually one of the largest borrowers in the world of Bitcoin right now. But we're able to borrow at super low rates because the borrowers know that the price risk here is minimal. So in this model, when the price fell, Alice simply receives more Bitcoin so that the value of what she's holding stays $100 at the time she withdraws the Bitcoin. Okay? So the mechanics of how the money movement works are actually extremely complex, but we've processed hundreds of millions of dollars worth of money movement for hundreds of thousands of consumers now in our system and haven't lost a penny for anyone, including Abra. And when the price fell 60% in crypto in the first half, the system worked flawlessly. So I think I'm almost out of time. Okay, so I take a couple of questions? Yeah. Oh, well, that hand went up quick. So, when did you launch and how come you're not a household name already? Yeah, so a couple of things. We launched in beta in November. We went into kind of full launch mode with the 25 cryptocurrencies in March. So it's only been, less than 6 months. But it's doing quite well. I mean, it's as far as according to Apple, it's the #2 retail app in the US now for crypto buying after Coinbase, at least in the US, because US is mostly iOS based. And it's growing. We're going to be launching in Europe for native deposits for SEPA next week, and more countries coming online for that. And then the second answer to your question is right now it's just crypto. When the asset classes become stocks, commodities, index coins for ETFs and other things that we're going to be launching next year, then I think it'll become a household name. But it's still going to be using Bitcoin in the background.
Excellent. Let's take one more.
Yeah, sure.
So how different is it from Circle?
Circle is a custodian, right? They're just doing.
You can trade and buy Bitcoin over there.
Yes, for Bitcoin, it looks the same just for Bitcoin, but what's going on behind the scenes couldn't be more different. And that's the second part of the answer to the other gentleman's question. If I start adding other asset classes, I can do it legally globally. Circle is legal in the countries where they have banking licenses or e-money licenses. Abra is live in every country in the world now except for the OFAC sanctioned countries because we're non-custodian. And because of the smart contracts, it has all these other asset classes that nobody else has.
Excellent. Well, thank you so much, Bill. And just my personal opinion, I think that Abra is going to be as well known as Robinhood, if not bigger. So I'm really excited to see how this company grows in the next few years. Just my personal opinion. But anyways, thanks again, Bill. Round of applause.